Hi, I am here to talk to you about a very popular loan program for self-employed borrowers to finance a home. It's called the bank statement loan. This mortgage product allows loans from $150,000 up to $5 million with the use of 12 to 24 months of bank statements to qualify. What most people like is there is no requirement for tax transcripts or tax returns. Let's define who is considered self-employed for a lender. Borrowers who earn 25% or more of their primary income from a business in which they have a 25% ownership percentage. Borrowers whose primary income is from commissions, consultation fees, interest, capital gains, gratuities, or real estate rents. Borrowers who rely on investments for income such as interest, dividends, capital gains, or real estate. If one of the borrowers meets the above requirement and the other does not, the borrower that is not eligible must fully document their income. Some additional eligibility conditions are: borrowers must have been self-employed for the most recent 24 months. The borrower must be self-employed or earn over 25% of their income from self-employment, rental income, commission, bonuses, or tip sources. Proof of 2 years continuous self-employment can be done with a copy of your business license, articles of incorporation, or LLC member agreement that dates back 2 years or more. All business licenses must be verified and current. For those in California, a professional license may be verified at ca.gov. Another way is to get a letter from a tax accountant, CPA, or other regulatory agency. Documentation must verify ownership percentage of the business. Borrowers whose self-employment cannot be independently verified are not eligible. What would disqualify my bank statements? Most bank statement lenders will deny your loan request if you have more than 4 non-sufficient funds, NSFs, in any 12-month period on your statements. You may be approved elsewhere, but at a higher interest rate with an explanation letter. Did you know that overdrafts and NSFs are treated different? Overdrafts are covered with borrowers' own funds, like a savings account or sweep account, versus use of a line of credit or credit card accounts to cover NSFs. The big distinction is there's usually not a fee associated with curing an overdraft. The second disqualification would be another person on the bank statement who is not a borrower. If you pass these tests, let's move on. How is your income calculated with bank statements? Let's discuss someone using personal bank statements. If you maintain separate bank accounts for personal and business accounts and choose to only use personal bank statements for qualifying, you can use 100% of the personal account deposits. You need to provide the most recent 12 or 24 months consecutive personal bank statements and 3 months of business bank statements to support the usage of 2 separate accounts. If business bank statements cannot be provided to evidence a separate business account, then the personal statements will follow the requirements of business bank statements. If a borrower chooses to provide 12 months of statements and the income analysis demonstrates a pattern of large fluctuations or inconsistencies in deposits, the underwriter may require 24 months of statements. A P&L is not required. However, when a P&L is provided, monthly income will be determined from the P&L and verified by the bank statements. Deposits will be totaled and averaged over either 12 or 24 months, as determined by the number of months of bank statements utilized to support monthly income. Large or irregular deposits that are inconsistent must be backed out of the average or be sourced to be allowed. Beginning and ending balances will be evaluated and must support the overall transaction requested. Bank statements reflecting other individuals who are not applicants on the loan are not eligible. These accounts are joint deposit accounts unless you can easily prove the deposits are 100% yours. Let's move on to those who want to use business bank statements to qualify. You will need to provide the most recent 12 or 24 months consecutive business bank statements. Deposits will be added up over the past 12 or 24 months on the statements provided to determine a gross deposit number. The gross deposits will be multiplied by a 50% expense factor to determine a net deposit number that is then divided by 12 or 24 months based on the program to support monthly income. If your business actual expense factor is higher or lower than 50%, the following may be used to determine a monthly income. 1. A CPA or tax preparer generated profit and loss statement signed by the CPA or tax preparer and acknowledgement of the review of your business records to support the P&L. 2. A CPA or tax preparer produce written statement specifying the actual expense ratio of the business and confirming the expense ratio is based on their review of the most recent year's 2 years of tax returns and year to date. In either letter, the statement shall not include an unacceptable disclaimer. The expense factor per the P&L or CPA or tax preparer produced statement must be reasonable. If a CPA or tax preparer produced statement is provided, apply the stated expense factor to gross deposits to calculate the qualifying income. The annual deposits on the bank statements must be at least 90% of the gross receipts per the P&L. For example, if P&L shows gross income of $200,000, the gross deposits on the bank statements must be $180,000 or more. Do I need to get a CPA or tax preparer letter? Yes, if you are using business bank statements and your business expenses are less than 50% of gross income. Now it's up to you to take the next step and move forward by starting your loan request with an experienced licensed mortgage originator.